Unlock today's market direction with this in-depth review of the most critical candlestick signals from September 30th, 2025. This actionable market analysis provides a full snapshot and an expert breakdown of key candlestick structures. We will cover technical interpretations, sector and industry highlights, sentiment, a comprehensive summary, and a data-driven conclusion using the latest chart formations to give you a trading edge. Let's dive into the market snapshot. Today's session featured significant sector rotation and notable bullish momentum, particularly in the technology and communications sectors. This was evidenced by dominant bullish engulfing and hammer candlestick patterns appearing on both the daily and 30-minute charts. For the technology sector, this surge translated into a 4.2% gain, adding approximately $61 billion to its market capitalization. The communications sector followed closely with a 3.9% increase, boosting its market cap by $45 billion. Meanwhile, defensive sectors such as healthcare held firm through doji formations, which signaled stability amid elevated volatility. The healthcare sector saw a marginal gain of 0.3%, representing a $5 billion increase in market capitalization. Financials revealed indecision through a mix of doji and belt hold formations, reflecting widespread caution ahead of key macroeconomic announcements and upcoming rate decisions. This sector ended the day nearly flat with a minor 0.1% dip, shedding around $2 billion in market value. Now let's break down the candlestick structures we observed today. The major candlestick patterns included the bullish engulfing and the hammer. These were predominantly observed in technology and small-cap stocks on both the 30-minute and daily candles, indicating strong buying pressure. A bullish engulfing pattern forms when a small bearish candle is followed by a much larger bullish candle whose body completely engulfs the previous candle's body. This signifies a powerful shift from selling to buying pressure. We also saw frequent doji and belt hold patterns in healthcare and other defensive names, which hint at consolidation. A doji is characterized by having a very small body, with the open and close prices being nearly identical, signaling indecision in the market. Lastly, bearish harami and hanging man patterns were noted in banking, materials, large-cap utilities, and energy, suggesting potential reversals and flashing caution signals for those sectors. The duration used for this technical analysis is primarily the daily candle for trend confirmation and the 30-minute candle for intraday moves, providing both macro and micro trend insights. Let's move on to the technical interpretation. The high frequency of bullish reversal patterns, like the bullish engulfing and hammer, in mid and small cap technology and communications, stocks indicates strong swing entry opportunities. These sectors showed clear signs of being undervalued, with significant buying interest emerging after the market opened at 9:30 a.m. Eastern Standard Time and accelerating into the midday session. In contrast, the persistent appearance of bearish formations, like the hanging man and bearish harami, within large-cap utilities and energy points to overvaluation risks and the potential for a sector correction. These bearish signals were most prominent near the day's high, which occurred around 11 a.m. Eastern Standard Time, before prices began to retreat. Healthcare's neutral doji dominance underscores market uncertainty, but also its resilience against broader volatility, maintaining a stable trading range throughout the session. Now for our sector and industry highlights. First, the technology sector, specifically mid and small caps on the 30-minute and daily charts, showed powerful bullish engulfing and hammer patterns. These formations point to an undervalued status and rapid upside momentum. With the strongest buying volume seen in the final hour of trading before the 4 p.m. Eastern Standard Time close, the communication sector, focusing on mid-caps, displayed Morningstar and bullish engulfing patterns on the daily chart. A Morningstar is a 3-candle bullish reversal pattern that signals a bottom, confirming strong positive sentiment and an undervalued condition. Next, the financial sector, dominated by large caps, printed doji and belt hold patterns on the daily chart. This combination reflects a mixed sentiment and high indecision among investors. Large-cap utilities and energy sectors are flashing warning signs. With hanging man and bearish harami patterns on their daily charts, this indicates they are potentially overvalued and face a rising risk of reversal. Finally, the large-cap healthcare sector primarily showed doji and belt hold patterns, suggesting it is fairly valued and exhibiting defensive resilience in a choppy market. To visualize this better, let's look at the candlestick chart formations by capitalization. In the technology sector, small and mid-cap stocks frequently showed bullish engulfing and hammer patterns, giving them a clear bullish and undervalued rating. For communications, mid-cap stocks featured the morning star and engulfing patterns, also signaling a bullish and undervalued state. Financials, being large-cap focused, were dominated by the doji and belt hold, leading to an indecisive and neutral valuation. In contrast, large-cap utilities and energy displayed hanging man and harami patterns, marking them as bearish and overvalued. Lastly, large-cap healthcare showed doji and belt hold patterns, resulting in a neutral stance on both sentiment and valuation. Analyzing the sentiment and outlook, the momentum-driven buying in growth-oriented sectors highlights a renewed risk appetite. Market sentiment is skewing distinctly positive in technology and communications, which found clear technical support at major price levels today. The overvaluation signals in the energy and utilities sectors warrant a cautious stance, with a potential for profit-taking in the coming sessions. The energy sector, for instance, declined by 2.1% today, a market capitalization loss of $29 billion. The utilities sector fell by 1.8%, equivalent to a $15 billion drop. Meanwhile, the defensive postures observed in healthcare may help mitigate risk for conservative portfolios during periods of heightened volatility. We expect to see increased price swings in financial stocks as more macroeconomic headlines develop later this week. Here's a summary to consolidate today's candlestick data. The technology sector had a bullish count of 9, a bearish count of 2, and 1 indecisive pattern, confirming its undervalued status. The communications sector showed 7 bullish to bearish and 1 indecisive pattern, also pointing to it being undervalued. Financials were perfectly balanced with 3 bullish, 3 bearish, and 4 indecisive patterns, justifying their neutral valuation. In contrast, the utilities sector registered only 2 bullish patterns against 9 bearish and 1 indecisive, flagging it as overvalued. Similarly, the energy sector had just 1 bullish pattern versus 8 bearish and 2 indecisive, marking it as overvalued. Finally, healthcare remained neutral with 2 bullish, 1 bearish, and 7 indecisive patterns. In conclusion, the market action on September 30th, 2025 brought actionable insights for traders. Bullish candlestick formations were heavily concentrated in small and mid-cap technology and communications stocks, signaling potential undervaluation and setting up tactical plays for those looking to capitalize on upward momentum. Conversely, overvaluation flags in large-cap energy and utilities, driven by a surge in bearish reversal patterns, suggest that the risk of sector rotation is high. Traders and investors should monitor these leading patterns closely and focus on the sectors demonstrating the strongest technical momentum and attractive valuations as confirmed by today's powerful candlestick signals. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.